If there was ever a moment for my niche in the market, it's right now. And the global climate for what we're doing, it's definitely, we were ahead of the game. And so we were able to take advantage of a macro compression and then get really good valuation on a company.
Thank you for joining us for our third Thursday Themes conversation this month. I'm your host, Michael O'Keefe, Chief of Staff at CAZ Investments, and I'm joined today by Doug Philippone, General Partner and Co-founder of Snowpoint Ventures, a venture capital firm focused on dual-purpose defense technology. Doug, thank you for joining us.
Yeah, it's great to be here.
Why don't you start by giving us a broad overview of your personal background, which I know is extremely unique and interesting, and then maybe bridge towards a background on the firm, its history, and the strategy overall.
Yeah, thanks. Well, I'll try to tell the story quickly, but give you the highlights here. Started when I was a young kid, enlisted in the Army. It was in the Rangers. Then I went to West Point. While I was at West Point, I studied mathematics, which is really key to my second career after the military. Then I was back in the military for about 17 total years as a commander in the Rangers. I did 6 tours in the war. Ended up getting hurt, was medically retired, and then I got out of the military and went back to grad school. Studied terrorism finance, which is basically figuring out how terrorists move money around and stopping it. And then I got started at Palantir in the very, very early days. Interviewed in 2007, got hired in 2008. I was employee number 1 for the defense business. I started the defense business for Palantir and then grew it all around the world. Got the business started in about 17 different countries, came back to the United States, stood up our government affairs shop, was the head lobbyist for a few years. I led our legal team into kind of breaking into, we sued the government and won, which is kind of a precedent-setting case that talked about commercial item preference. And then, that's a key thing because it actually is setting the stage for today's defense technology. Wouldn't exist if we didn't win that. Then we took the company public. And then about 4 years ago, along with a partner of mine who was also from Palantir, we started Snowpoint Ventures. And the idea was a little bit of paying it back, but we were both veterans and we both believe in the mission. We both believe in having our best engineers and computer scientists working towards important societal problems, and defense being kind of one of the most important ones. And we thought that, historically, even 5 years ago, what you'd think of as defense technology didn't exist. It was like Boeing and Lockheed, and it was pretty boring and nobody cared. I say that in jest, but the current microcosm of entrepreneurs that are really excited were not interested in it until Palantir was sort of like the first coming out party of a venture-backed company that could go public successfully while working in, at least half the company being in defense, and then be in I guess now they're in the S&P 100. So it's been quite a journey. And so the idea was, could my partner and I, with our knowledge from like our education, our life journey in the military, but then more importantly, our life journey building what came to be, an S&P 100 company, is that operator experience of knowing how to build tech and how to sell tech and help new entrepreneurs, CEOs that want to break into that space and do something useful for society. And so our thesis was, if we legitimately help them, we thought that we would get right of first refusal on the best companies. We were going to be very concentrated, where we wanted to really work on the companies ourselves. So where it wasn't just, we're going to invest in 300 companies and hope for the best, where it was like, I'm going to personally work on this company. So anyway, we're 4 years into it. We're having our first exit at the end of this month. We actually already had it, but we were locked up in the public market, so it's exciting. Outside of that, we're just starting our second fund, and the global climate for what we're doing, it's definitely, we were ahead of the game. So it's an interesting time for our sector.
Thank you. We'll touch on a lot of those tailwinds later. And before I lead into my next question, let me thank you on behalf of our firm and the entire audience for your service. We're incredibly honored to partner. So we've had the opportunity to partner with Snowpoint on a myriad of different deals. You know, based on the conversations we have, we start every single one of those sessions the same way. What's the worst case scenario? How do we get hurt? How does this blow up in our face, et cetera, et cetera? How do you think about the worst case scenario as a firm? How do you mitigate that downside? How does that structure into your investment process?
Yeah, I think, how we think about investments is, do they have brilliant founders? Do they have brilliant engineers? Is the idea credible? We don't do seed for the most. We've done one build company, which is a little bit unique, but for the most part, we're Series A and beyond, and they have to have a real product. They have to have real revenue. So we're sort of starting at that, like, hey, it's real. You can touch, feel it, and you can sort of like measure the risk a little bit. But I think that like I try to mitigate the risk. My biggest, it's not 100% obviously, but the biggest way that I mitigate risk is I view the company as, could I be the head of business development for that company? And do I see the path of accelerating the revenue? Because obviously with all these companies, revenue is their lifeblood. And if you don't have revenue, or if it's not on track, you have to raise money, and then, it's like, it becomes this like decaying function of how long you could stay alive. And so the number one way that we mitigate the risk is thinking about, how do I personally, and my extended team of operators, I have quite a network. I'm older than I look, but I have like a lot of people. I say that in jest, but I have a lot of people who help me. But it's like, how do we accelerate the revenue? It's the biggest problem with all of venture. How do you get to market quicker? How do you get revenue? And then in the government space, that's like the biggest problem. It's like, okay, it's when you get a contract, it's this really high quality contract that's like an annuity, they pay forever. It's great, but can you withstand that valley of death, they call it? And that's, I say my job is to like accelerate that as fast as possible.
It's a unique approach that you take, talking about putting yourself in the position of someone not only just working at the company, but actually trying to grow it, accelerate it, pairing that with what you spoke about a couple of minutes ago, where, contrary to what a lot of venture capital firms will do, which is, go invest in 40, 50, 60 different companies, throw paint at the wall, see what sticks. It sounds like your portfolio is much more concentrated. You're much more involved. You're taking a slightly different approach. Maybe let's just spend a couple of minutes on how that unique approach in your specific space, with your background and your team's operational focus, helps you drive value differentiation inside your portfolio.
Yeah, I mean, I think the biggest thing is like, even top of the funnel. I have a technical background, so I can sort of, in many cases just barely understand it, but at least I can understand it. But I can get fairly technical. And then, so it's sort of like, how do you get the funnel down to the things that I want to work on, right? And it's like, get rid of all that as fast as you can. So it's get rid of all the posers and fakers, but then also like, besides the technical experience, the like go to business strategy of just sort of like thinking with the CEO, how are you going to take this to market? And like understanding those, I can sort of like, I can visualize, ooh, this isn't going to go how you think it's going to go. And that's like, even though I was joking about being younger, this is actually when it's better to be a little bit more experienced, because you've seen these things and you're like, I've seen this before. There's a few tricks, but not quite as many as you think. And you might just be wrong. And so we can pass. So like the most important trick that I know is pass on a lot of deals. So, like that's every venture capitalist's like best trick, is if you can figure that out. Don't chase dumb deals. But then it's like, okay, once you understand the technology, then it's like, okay, are you aware of, when I was in my journey at Palantir, it was like, I understood all the levers of government. I understood the press. I understood how the acquisition process works. I understood how to get competition. And so you sort of see this thing of like, how could I get, if the challenge then goes back to the entrepreneur of like, okay, can you build me the mousetrap? I see the mousetrap in here. How do we get to production so that I can force a competition and then we win the competition? And then I know how to do the levers of budget, where it's like, okay, we're going to reprogram money to move fast. We can get other transaction authorities, or we can get real programs or records. Like, how do you know all the tricks to like accelerate in government where normal entrepreneurs would just be lost in the wilderness. And that's like, with these companies, it's a ticking function, and you're just trying not to run out of money. That's it. And so the faster you can move, the better. And so that's my challenge every day.
Yeah, it's a unique challenge, and maybe to translate, I think the true find what matters for the audience is partner with those who know what they're doing, who've spent their entire careers doing it and are truly the experts in the field. Tourists normally get run over by a bulldozer, but especially in a subsector like this where everything's very technical, it matters a lot more. So staying along the same lines of the worst case scenario discussion, let's pivot very slightly. What's the largest challenge or headwind in defense technology today? And what are you and your team doing to overcome that headwind?
Yeah, I mean, look, it's very nested with what I just said, is that the biggest challenge you have is like this macro environment of raising money. Like if you do the thing that so like the challenge that I see is some very good companies are building what they said they were going to build. There is interest in the market. It fits a real need. It could blow up in a huge good way. But it just takes a little bit too much time. And then you run out of money. And because for whatever reason in the macro market, the Nasdaq's crashing, whatever, and liquidity dries up and you can't raise money, and you're like, whoa, what do I do? So like that is a challenge. It's like I haven't figured out exactly the macro challenge, because you're like, ooh, the biggest thing there is just like, hey, you got to be like working every day. There's no golf trips. It's like, all right, we got to focus on this and like figure out. But the other thing though is, if I say that, like, what are we doing about it? That's what I worry about, is things that I don't have control over. It drives me crazy, because it's like I know how to fix the things that I can affect. And just work harder, and like I know how to call my network, I know how to get people in front of us. The tech is real, you can win, but it's just like, how do you accelerate that process? And so it's just, when you get into companies, a little bit of his foresight of like understanding, okay, when you build the mousetrap, let's think 3 or 4 years down the road. Are we optimistically thinking that we're going to need capital, that we're going to be able to raise capital where you have no control over the ability, even if you've done it? Like, these are the things, it's just like, you have to think a little bit longer term, where we might be passing, I can't do anything about the past, but going forward, it's about like, I love what you're doing. I see the path. I know how to work on it. But in 4 years, if we've done everything, are we going to be at risk for something? Is there some cliff that we can't? That's something I haven't totally figured out yet. But it's like, but you see, space deals are like this. High capital intensity things, vehicles. Like large unmanned aircraft things, submarines. There's a bunch of like equipment things that are fascinating and really interesting. That could fall under this, where you actually have to build a factory and do some other stuff with. It's like, be hesitant on those deals unless you have the capital to come in. Because if I use the example of space, we just did our first space deal after 4 years of looking at space, and we were able to take advantage of a market compression where oftentimes we had got to yes on, I love the technology, I love the use case, I love the revenue flows, I can work on it, et cetera, but then the valuation was no good, right? And it's like, I don't know how to exit this thing and make money. And so we were able to take advantage of a macro compression and then get really good valuation on a company that actually you guys are in with us. But yeah, it's exciting. Sometimes you can take advantage of those opportunities. I just don't want to be on the other side of that, right?
Yeah, of course. It's always one of the most fascinating experiences for me, being able to open your presentations and read about companies like Astranis and Rivet and Shield AI. I mean, every single time, the first slide is a photo that blows me away. The fact that this technology exists, that we get to look at it, that you guys get to, it's truly, truly spectacular. So we've spent some time focused on downside. Let's shift and focused on tailwinds. So in recent publications, you've referenced multiple times the opportunities created by the inefficient processes that exist across the government today. And obviously, particularly with the Trump administration. You have the Department of Government Efficiency, you have Elon Musk effectively flipping the entire machine on its head, and you're pairing that as its own idea with everything that's going on around with tariffs and the way in which the United States interacts with other countries around the world. How do all of these factors play into the macro story for defense technology?
Yeah, I think, I don't want to get ahead of myself here, but I just sort of feel like this is the time for what I'm doing. I have to turn that into it, but it's like if there was ever a moment for my niche in the market, it's right now. You saw, even just last year, global defense spending rose to like $2.46 trillion. And it's set to grow. And so, and you just saw like basically with the blow up of Zelensky and the Trump-Vance meeting in the White House, it's very clear. I think President Trump's quite good at this actually, but there's like, without getting into a big political discussion, what I believe the basis of the goal here is, look, the rest of the world, especially NATO, has been a dependent of ours for many years. They take advantage of us. It's not reciprocal in any way, shape, or form. We pay more than our fair share, and we just can't afford it. And getting them to step up and just get out of their like tourist economy mindset and make them first person accountable for their own defense is actually like, if he can pull this off, which he seems to be able to do, it will be a real coup in sort of diplomacy, and for the nation, it would be really good because we would love to have all that money back. And it's just obvious, like in a nonpartisan way, we just cannot afford all of this. And so what you're seeing, on the cusp of that meeting, all of the European countries are stepping up. And so, even though many of them were negligent in their 2% GDP goals, now, many of the countries, now you see Germany is flipped fully the opposite of like, now they're going to actually go into like deficit spending. It's like, it's pretty radical in terms of psychological flipping. The UK is trying to be a leader in this, but more importantly, all of those European and NATO countries are stepping up spending significantly. Like one of our companies, Shield AI, now you see, instead of the US being the purchaser of weapon systems or Shield AI, drones for Ukraine, now it's going to be the Nordic countries. It's just so you're seeing different people, and as a taxpayer, I sort of love that. But you're really seeing that they're actually doing something for real. You're seeing Taiwan step up; they're buying their own defense stuff, and around the world, this is a great opportunity for all of our nimble defense tech, venture-backed defense technology companies to fill that need in a way, because we just can't afford the F-35. These $100 million planes that it's like, hey, are they exquisite and really good? Yes, but no one can afford them. And if you can buy 3,000 drones for the same amount of money, that's just a winning ticket. So, and then if I could go one level deeper back, so like there is a global phenomenon that is going to be a huge tailwind for us. And it's like all of those nimble companies that can build faster, better, cheaper, it's going to be really good for them. You still have to have a product. You still have to actually have efficacy, but it is that time to, you either prove it or you don't. But it's going to be the next 3-4 years. It's like, hey, this is the time. Back in the US, it's a different opportunity. And I think that it's like, in many ways, the budget cuts are actually really needed. And I've said this for 15 years. Cutting the defense budget would be good for companies like Palantir and certainly all of the others, because what ends up happening that is like when you get rid of the fat, it has to work. And all of a sudden, if you go to Booz Allen or Northrop or something, and you say, well, it has to work. And then all of a sudden you create this like real exigent moment where you have to deliver. And all of our companies will actually do that. And it feels, I think that regardless, I think the defense budget is going to go up. I think right now we're looking at a continuing resolution that will have a steady state. I haven't seen the exact text, but I've heard inside line is that there's some language in there where typically a continuing resolution doesn't allow what's called a new start, where you can do new things. But I've heard that there is some technical language in there that allows new starts underneath other budget lines. So it wouldn't break that appropriator mandate, but it allows new starts. So it's really, that could be really good. And then secondarily, there's something called budget reconciliation. It's a technical process, but what it allows as a kind of a ride-on to the defense budget, the House and Senate can pass with a simple majority, so 51 votes, which they have, plus ups, and right now I'm hearing $100 billion plus up to the defense budget. And so you'll see two things. The ability to maneuver and cut within the existing, you're seeing Hegseth, like all that stuff where it said, the 8% cuts that I say, it was a little, made some waves in the news. That was misinterpreted as it's not cuts. It's Hegseth was talking to his service secretaries saying, find 8% of savings within your portfolios so that we can focus on our 17 areas or so. And then so if you add that, and all of that extra money goes to things that we're working on, right? And then also, if we get the extra $100 billion, all of this is really good for us. Yeah. That doesn't mean you don't have to deliver. There's no free chicken, but in terms of tailwind and like in a way that I haven't seen in my adult life, everyone wants to like be more lethal and save money. It's like, this is the time.
Yeah, so there's a lot of focus on your space. There's going to be a lot of drive towards efficiency, a lot of drive towards innovation. You're in the business of funding and capitalizing on that innovation, so it's very good for you. Let's pivot very slightly. So one of the benefits of being a sector specialist is that you get to spend all day, every day, looking at nothing but defense technology. Doesn't get more specialized than that. Very few people can say the same thing within your niche. So for those investors listening who don't spend all day reading, speaking about defense technology, are there factors that investors are missing? Really crucial things, could be macro, could be micro, could be something totally different that you think really matters in your space today that investors should know about?
Well, like in terms of specific companies or like technologies or like
could be either one. I think interpret it as if you wanted to give the audience a single piece of information that they don't know about or aren't thinking about actively that's going to matter a ton in 5 years, what's that one thing?
Well, I think that we're seeing huge advancements in autonomy, and that is sort of like a technical field within AI where basically things move by using AI. That's the most simplistic way to say it. But you can think of autonomous cars. You see this a little bit with Tesla, et cetera. Most of the car companies have tried this a little bit, and most of them quit because they know how hard it is. But you hear about this in the drone space, in the aviation space quite a bit. But it's like it is a very important field, and so the challenge is the command and control of like how do you control thousands of things. If you can figure that out, and then and if you lose communications with those devices, it's like it's one thing. It's like I either have line of sight or radio communication or SATCOM communications with something. But if you lose communication with something, which is basically all the time now, there's something called electronic warfare, where it's basically like you're either blowing out radio frequencies and like severing comms, or you're jamming or blocking any sort of communications. Or you're turning off GPS for that matter. So like a lot of our fancy weapon systems rely on GPS, and you can just turn that off. That's a big, big problem. And so this is a fundamental, the one thing I will tell you is if China all of a sudden shuts off all the GPS satellites, we need a backup plan because everybody who's watching this podcast or whatever we'll call it, they will notice it right away, even if they barely know what GPS is. It will affect their lives. And so having the ability to navigate autonomously using GPS to navigation techniques, a little bit is like going backwards in time of just like remembering any of your viewers would be veterans, but it's like they have this something called dead reckoning, where you just follow a compass and you're like looking down and you take certain steps and whatever, and that's how you navigate. Well, there's a bunch of different techniques in navigation where you have to be able to sever all that and it still works. So you have like, it'll be like LiDAR, radar, computer vision that will be tied to those things. You can have, they call them inertial navigation systems. And so in some ways it just keeps track of the motion and it can tell you how far, then which way you went. So it's sort of like a breadcrumb. And then you're keeping track of the way you went that way so that if you lose GPS, you have the ability to tell where you are still. All that's like a hard challenge, and very few companies have done that. But I can happily say that Shield was able to do it in spades inside Ukraine in a very electronic warfare filled environment. I think also one of the things that I'm very excited about that I know that we will hear about very big here shortly, but certainly in the next few years, is just sort of the proliferation of augmented reality into the normal workforce. Starting with the military, in many ways, the military is like the lead user of some of these technologies, but having the ability to, like, you think of the military in terms of you're recruiting young high school kids and then they're going into different fields. Some of it maybe be the infantry, which is more hands-on, and then you could be a helicopter repairman, a tank repairman, but actually like doing hardcore technical repair work on something where you're not technically trained and you're not a tradesman. That hard problem, and how do you train those people? And one of those things is using augmented reality to help bring up the level of work so you can get information, use computer vision to understand what's wrong with something. And this has been something that's like the big tech companies have focused really on consumer-based games so far, and then the form factor has been wrong and it's all been made in China. And so you're thinking about, like, we've been specializing with a couple of our companies, but specifically with Rivet, it's going to be a game changer. And we're working on the Army first, but with a very large contract with them. But there's huge demand from like making airplanes with Northrop Grumman and Airbus to building cars with Porsche motor cars and Panasonic, and a myriad of like lineman type works where you have physical workers who use tools and helping them do their job. And there's a massive, massive demand for it, and no one's making it. And one, it's like really, really hard to make, first of all, and it's all made in China. So there's like a bunch of really interesting tailwinds there that we're focused on that I think people will see more. They've seen the commercial version of this, with Facebook and Google and Apple for that matter, but it's all been game focused. Like, this is actually like people doing surgery, people working on cars, people like getting, targeting information in their glasses. It's going to be big. More to follow on that, but it's exciting.
Yeah, it's incredible to read about what Rivet is doing. It's truly special. So pulling all of this together, we'll conclude with a question around risk reward. So at CAZ, we always do things on a scale of 1 to 7. In this case, 7 being the absolute best, 1 being the absolute worst. Where would you rate the overall risk reward in the defense technology space?
Oh, that's interesting. Risk reward. I don't know, maybe 5 or 6, somewhere around in that range. I think that it's like, we sort of view, I'm still proving this out, obviously, but like when we think about, we're still going to have our losses just like with any venture. And then we'll have a few losses, then we'll have a few uncapped returns, right? But then where you like really differentiate, it's like, what happens with all the middle stuff? Do they all go to 0 and you just have your, 20xer that takes care of it all? Or do you get a return on that middle tax? And I think that's where the defense technology space, especially what we're doing at, is differentiated, is that we feel like there will be an outsized where we just get our money back and it won't go to 0. Will be purchased by the big systems integrators, because a lot of pressure on the systems integrators to like innovate and really, I don't know, I guess say it again, to just innovate at all. And that's just not in their DNA. And so they're going to be forced to do more and more acquisition. And I think like we will see more of the companies that I deal with, more of them will go public, because there's just a lot more interest in it. There's a lot more understanding in it, but then also, I think the tolerance for mergers and acquisitions, there's always been M&A that's happened in my sector, but it hasn't been because the big primes don't get a big market multiple. It puts a ceiling on where they would do that. So say it's like, 500 million or so, maybe 750 or a billion at the most. It's kind of that range where it'd be like, hey, you can't invest much more than that because they can't buy it anymore, and then you don't have an exit, right? They're going to be forced to change that, or they're going to go out of business. They just are. You already seen Booz Allen. I don't know if you've seen it. It's already like down 50%, in the last 6 months.
Yeah.
And it's like, that's going to force these companies, and they have venture arms too. And I think they are in at least a couple of my deals, and they're interested. Lockheed Martin has a venture arm that are in a couple of my deals. So there's like, you'll see more of that. I'm giving you a long answer, but I think where it differentiates is you have a bunch of deals that you get your money back, or you make 30, 60, 90% profit, and maybe the IRR just ends up being 17% on those deals or whatever it is, but you just don't go to zero on those deals, which would be typical for venture.
Yeah, that's incredibly helpful. I think it really puts into context everything that we've spoken about today, all of the incredible macro tailwinds, the way that you focus on the firms in which you invest, the companies in which you invest, and do things differently. So, Doug, on behalf of the entire audience, thank you very much. As always, we're incredibly grateful for you and your team's continued partnership and support. We look forward to seeing everyone again for our next Third Thursday Themes conversation.
Thanks, Michael.